Stephanie, I think the next question I have to ask is, um, debt's impact on asset price. Like, do you feel that asset prices are high largely because most people are buying homes using debt?
Personally, I feel that it's related. So I think like you mentioned just now where, the total allowable DSR in Singapore is about 40%, is it?
Yes, around 40 to 50.
Yeah, but in Malaysia, it's not that strict. So it depends on the level of salary the person is earning. So the higher it goes, the more you can borrow. And it can be even up to 80%. So of course, if you're a rich person, then you get even more. Meaning even more than that, meaning more than 80%. So I feel that that's one of the factors. And even it has also appeared in news several times that, because of the ease of getting credit, it has kind of somehow in a way push up the property price. So I find that there's a correlation on that. Yeah. What do you think, Aaron?
Uh, I guess the main question why I ask you that is because I'm wondering whether the property market is a credit market or is it a cash market? Because if it's a credit market, right, my question is how leveraged is the market? You get what I mean? Because it's like it's okay to borrow a little bit of money, but I think my concern comes, right, is that if you're talking about like a median income person, right, borrowing 80% of their cash flow, it kind of signals to me that either the incomes are too low or the or the property market is very hot. Yeah,
80% DSR, for lack of a better word, I feel like the property market is leveraged balls to the walls, man.
Yeah.
and then
Like,
you
like
see,
it really, it's signaling like this is a lot of people gonna shit on me for saying this, but it sounds like a freaking bubble. I'm not gonna try to be like Michael Burry and like short the market, but I'm just so worried. It's part of like the reason why like I rented instead of like buying a place because I'm so concerned.
but
Meaning
Steph,
is
you did mention, right?
yeah.
You did mention, right, Steph, that there is still value in the second resale market, right?
Yes. In fact, a lot of people have managed to, make some profit out of the subsell. Or if you really just want to find a value like worthy house to buy, there's still opportunities in the subsell market where it's not that expensive yet. Yeah, it's quite rare. You may have to take some time to look. And once you have found it, you have to really grab it. The property clock way of looking at the property market now, we are around, I would say, around 6 coming up to 7 or even 8 o'clock. So I would say most of the money made would be when the market is bottoming. So just like the stock market, right? So I find there's still value in the subsale market. That's why I always think that's value, but just have to be really hardworking to find out good deals and desperate seller.
It's a
Actually,
follow-up question on these good deals on the sub-sale market, right? Does all these properties, do they tend to be in those high demand areas, like say for example in KL there's like Bangsa, there's like Monkera, there's like Desa Park City, and yeah, but do they tend to be located in these super high demand areas?
Yes, definitely. It's
Oh,
just that
that's interesting.
yeah, it's just that it's lesser, but doesn't mean that there isn't any. So just have to really keep a lookout. And then also I find have a few good property agent, like treat them well enough, they will give you the insider deal firsthand
like Steffi
before that.
Condo.
Yeah, no, because
Shout out to Steffi Condo at Instagram.
but I'm not based in KL. So if you have a few good agents, then they will definitely help you as well to give you the good deals before they post it out or
Right,
promote it.
right.
Yeah.
Like
Because
for yourself,
you
Steffi,
yeah.
for yourself, Steffi, just sorry to interject, but for yourself, do you actually buy brand new or you tend to go for resale?
I bought both brand new and resell, and I find that resell has more value. But brand new is good in a way where the upfront cost is not that high. You can get in cheap. Like maybe the developer throw in promotions, and yeah, so you can get in cheaper. But subsell, there's more value as in I get to buy under market value. Yeah. So there's benefits for both actually. So one is get in cheap and the other one is I find more value like more under market value.
Mm.
Yeah.
Actually, Steph, correct me if I'm wrong. Would you say that for a person who wants to buy a house, right, to live in, let's say I don't care about investing, right? It makes more sense for me to buy a brand new unit. Then if I'm an investor, and my concern is capital appreciation and higher rental, does it make more sense for me to go subsale?
I think yes, but for certain subsale unit, the investor may have to get ready some like refurbishing costs, like to make the
Mm.
unit nice, yeah, so that they can rent out at higher price,
Mm.
yeah.
So guys, you
So
heard it from Steph. I guess like the main reason why I asked is because I do know that um Kuching, the property market is quite hot. Like because I do have a few friends from Kuching, right? And
oh,
they did tell me that the property market there has been very like wow, the cost there, correct me if I'm wrong, has been soaring as of the last few years. Am I right to say that?
yes, it's quite scary, and I
Like how much
personally,
percent increase would you say, like in the last like 3 years, like the property price you buy, not no, you don't have to tell us your performance, but I would say that what percentage increase like in the last 2 years since COVID?
I would say 20 to 30%.
Wow.
Every
Yeah.
year or
I think no, I mean within these 3 years lah.
and then before these 3 years, have you ever seen such a huge increase before?
No, actually it's more gradual increase. But I would say it's because of the undersupply. Actually, Kuching is facing some undersupply. So if the area that you are targeting to get is facing some undersupply, definitely the area may be going to face like upward pressure on price lah.
Mm.
Yeah.
Yeah, everyone, you heard from her. There's alpha in Kuching. I repeat, there is alpha in Kuching.
Yeah, I would say like that's why we always enjoy talking to you, because like you tend to always come from a perspective where it is an investment and you need to do your due diligence,
Yeah.
which we do find that is quite rare amongst property lah. Because I mean, I don't think it's just specific to Malaysia, because I very clearly remember during the COVID crash, right, after the post-COVID, one of my mentors, right, he told me that he's been waiting a long time to buy a condo. He wanted to buy an investment property for his investments, for his retirement. So he wanted to rent out. So he was waiting for this like show flat, right, in Singapore, one of the condo developments, right. And then when he got there, because they opened the show flat now, and everybody was so scared that the property that basically like the cash is going to shit because they're printing so much money, right? That there were like 8 hour long queues for people to buy the brand new launch condo. And like they started waiting at 8 o'clock, right? And then by 6 p.m. The entire development was sold out.
Wow.
What? One
Yeah, and
day?
then in one day, the entire development was sold out. So my question is, number one, Singaporeans really got that much money, number one. Number two, number two, right? It also kind of signaled to me that it was a little bit of a bubble, because because my mentor, right, he was actually buying the flat towards the end, right? Then he actually, thankfully, I don't think he said he wanted to buy, because the price was increased, insane. Because like I think within a span of like that 8 hour window, people were literally signing documents to buy units, right, where they have no idea where the units are, so they don't even get to select their units, and they're paying a premium of like 30 to 40% above the initial price at 8 a.m. So
Is that not a normal thing in Singapore? Because like in
no,
Malaysia,
it's
right?
not.
In Malaysia, right, like one of those high demand properties, what they do is like during launch, when you sign up, they do like a raffle thing where they kind of like pick people at random and give you like a couple of days time frame to confirm whether you want to buy the unit or not. But you don't get to choose where the unit is. It all depends on your luck in that sense.
As for public housing in Singapore, lah, but I would say that in the most of the private condos that I go to, you always get to choose your unit, your exact unit. They literally do a model up for you, and they ask you, okay, where you want? You point to the unit, we tell you the unit number, then I buy.
Right.
Yeah, they really don't do raffles, unless, as you mentioned, it's a super hot like property lah. But I think the problem was that particular property was not a hot property. It was like a pretty like average like property, and people were getting in because they were so worried about the undersupply because of COVID. So they were very concerned that that we weren't able to build enough houses for the next few years lah. And so they basically were waiting for a crash, and the crash didn't happen, right? Then basically property prices within a span of 1 year, like what Steph has mentioned, in Singapore also surged by 30%. There was a public housing in Singapore, right? I think last week in the news that sold for 1.4 million Singapore dollars.
Oh, that sounds like FOMO.
That is not I would say it's prime location. Okay, so in terms of like relative value to private, it's not too bad, you know. But I would say that it kind of shows you like it kind of shows you basically going back to the case that I think most people, the reason why they are looking to diversify assets, right, is because they are very scared that the currency and their savings get liquidated and basically get devalued. Because I mean, you Malaysians probably would have felt it quite badly, I think, in the last year or so, where you saw your ringgit depreciate, right?
Yeah.
Yeah,
Yes.
so like I always like when I was young, I was wondering why because I came from a primary school where I think 30-40% of our classmates were Malaysians. You know, so I always wondered why Malaysians like to buy gold when I was young lah. Then when I grew older, I started to realize it's because the ringgit needs to be hedged lah. I would say if you are earning in ringgit, then you do need to buy things to make sure that your savings don't get inflated away. I mean, inflation is also a problem in Singapore, but I think it's a bit worse when it comes to Malaysia. You know, so I
Mhm.
think that's why people buy store of value assets like property. And if you borrow in ringgit, right, and if your you use that ringgit debt and then you buy a US dollar asset, it goes back to the question of double dipping, right? You earn on the currency and you also earn on the asset. Okay, Steph, I would like to ask you, right, knowing that you foresee, right, that interest rates are likely to increase, do you feel that it justifies people to hold cash, or do you feel that business as usual, people can still buy homes?
I feel that those who need to buy a home will still buy a home because I don't see a shortage of demand as of now. So I still feel those who really need will still buy. I mean, at least in Kuching, in the case of Kuching, but from the property guru report, it has been reported that there's more people renting than buying now because the demand curve is a bit slowing down now as compared to people looking to rent.
So does that mean there's actually like less? Because I think we can all agree that the property market is quite dominated by people who take on multiple loans to buy multiple properties, leverage and all. So would you say that there's much less investors nowadays versus renters?
I would say there's still a lot of investors because especially those who are really invested in property, they would think that property investment is more straightforward compared to other types of investment. So I really find that that's one of the reasons why they stick or they want to try out property investment now.
But I think, yeah, in that sense, like in equities, we always say we want to dollar cost average, dollar cost average. But when you take a loan to buy a house, you're basically forced to dollar cost average for the next 35 months. So I think in that sense, it's quite good that people are disciplined enough to pay the mortgage every month and keep holding on the property until the day they sell, right?
Yeah, and if they can get someone to rent their place and give them cash flow, then I think that's also a very good thing lah. But provided they invest back the cash flow that they earn every month.
So in a way, that's kind of like dividend stocks and like dividend reinvesting plan, right?
Yeah, definitely.
Right.
In,
So Erin, you were saying?
I would say that in many ways, what Steph has described is value investing lah, when it comes to property, because that's how I've always viewed the property asset class. Because whenever you want to earn or whenever you want to make profit in real estate, right, and property, usually what I've noticed over the years is that you need to be able to buy the asset at a valuation that's below market rate. That is really the main way that you make money from property. Because like property, do you feel that it can 5x over 35 years? Is that possible?
It's only possible when you leverage.
Like
But
like
if you talk about like the underlying asset price, right, it's not gonna do that.
like
It's
like
definitely not gonna do that.
yeah, because in Singapore, right, I can share that in the last 25 years, our property prices definitely did not 5x. At most, it only went up by about 40%, maybe about 50%. The annualized rate of return for public housing in Singapore has only went up about 3% per year. So if you take a multiple, you take the 72, right? Basically, you're only at most doubling your property price in about 25 years. So like I find it very difficult when it comes to like property investing to come from a perspective of a growth investor. You get what I mean? Because if I borrow money, right, and then I'm paying like a 5% like interest rate, right? I find it very, very tough to get a return that is about 5 to 10x my borrowing. Because I would say that in most cases, property, the asset class is quite a competitive market. It's a very competitive asset class. You're fighting against developers, you're fighting against organizations who are designed to mass rent. And then you're also fighting against Airbnb, you're fighting against Agoda.com, you're fighting against hotels for accommodation, right?
Mhm.
So, and then if you're a singular person who has to juggle all this, right? Then I would say in terms of cost, in terms of business, the cost, the only way that you will have advantage, right, is that you are a single person. You're one person, right? And then you buy below market cost, which is essentially a value investor play, which is what you can do in equity. But I would say that it is probably more effective in property because property generally, right, the value of the real estate generally does hold because as what Stephanie has mentioned is that the demand for property generally does not go down. I think stems from cultural values in terms of the Asian culture because the Asian culture is that, after you hit adulthood, it's best that you buy your own place, you buy a house because we do love properties, but I think you also doesn't mean that you love a property means that you overpay. And that means that you must come from a person who is like, where is the value? And if possible, I would like to buy below market price.
Yes.
Yeah.
Yes, I
Right.
definitely
And
agree.
then and then I guess the bigger picture is whether or not the market price is inflated. Because personally I don't really see that I don't know how bad is it. I don't know how like inflated the market is because I'm not in Malaysia, but I can say in Singapore, right, I wouldn't say that our property market is overinflated. I would say that the government has learned over the years, right, here, right, to know how to manage the prices. And usually the key metric that I look at when it comes to whether or not the property market is overvalued, right, is to look at the mortgage cash flow percentage that people are paying in that country. If you say that I do not think that we are in a bubble because on average, a couple usually still spends around 20 to 30% of their income into one home property. We generally do not exceed that. It's usually around 23%. And even if we come out cash, at most stretch 30% is the max. Yeah, this is the Singapore percentage. Whereas in Malaysia, if you're telling me like people are stretching 50, 80%, it's tough for me to get my head around.
Yeah,
Yeah.
the number is a bit insane, I would say. The level of leverage that Malaysians take is a bit, I would say, it's on a very unsafe level, if that makes sense. Because
But
like
but
you just hear
but
stories about people aping like 50% of their monthly income into a house, just because their parents or their girlfriend, their in-laws wanted them to have a house. And it's like depressing, then the person's like living on like I don't know, minimum wage conditions, and then just because he needs to own the house, it's very depressing.
Yeah.
I think the
I,
standard of living gets hit quite badly also.
And if
yeah.
you consider I'm not sure about the whole Malaysia, but in KL especially, like Klang Valley, right, you just see like ghost townships popping up left and right. In the city center also, you have like all the ghost condos, ghost office towers, and there's like nobody, there's no occupants there, there's nobody who actually uses the property, and somehow rather the property prices are still going up like nobody's business. It just blows my mind because like in the end of the day, all these things are all supply and demand, right? But in Klang Valley's case, I speculate it's being propped up by credit, and that's like a perfect storm for the 08 09 crisis in US.
Stephanie, just a quick question. Most of the people that you meet, do they come across as prudent buyers? Are they still quite prudent in the
Mm,
terms of the amount of leverage do they take? Like, on average, when you like look at people who buy property in your area, right? Usually, how many percent of their income? Let's say they are genuine like first-time buyers, they want to buy their homes. How many percent of their income do you usually take for their loans?
I would say because I serve mainly younger buyers like millennials. So I find that it's a 50-50. Some of them they know how much they should buy. Some of them they really have no idea. Like even when they come into a show gallery, right? They will ask me, how's the process like? How is it usually like? Or to apply loan, what should I have? And I would say it's not uncommon to have buyers that actually do not know how much they can actually afford before stepping into a show gallery. So which I think it's very important to know all this, like how much you can actually afford, how much debt should you take, whether you can afford these houses or not, or what price range should you look at. I find that that's not widely talked about enough lah.
What's a good like percentage range you think?
I would say 50-50. It's not that bad, but it's not that good either lah.
But as in, let's say for example, if I'm a new buyer, right, what do you think is like the percentage of income I should set aside every month to comfortably afford a place? Is it 10% of my income, 20% of my income?
I would say those that I've come across, they would even go 30 to 40% of their income just on
Oh,
and it's like mostly couple.
so
So
that means it's both of the couple, like the girlfriend and the boyfriend, both putting down 30 to 40% of their income just to buy the house.
yes,
Oh
and
my God.
they may not even need that kind of space, like a couple, young couple, like what you mentioned, boyfriend, girlfriend, but they are looking at semi-D. So it's very not uncommon. It's actually quite common. So I feel that it's important to remind buyer to know actually what do you need. Do you really need that size? And then whether you really need to commit yourself to such a big purchase at this stage lah.